Welcome to DeFi Crypto today. Our topic today is how to profit in a recession. Tips and tricks to thrive when all is doom and gloom. Yeah, like right now, I don't know what's going on, but everybody's like, biting their fingernails and like going crazy, and like markets is going down. Luna crashed. UST lost its peg, and then there was contagion on other stable coins and everything. People are just panicking. Panicking. We can see it here on the Bitcoin Fear and Greed Index, and we're at 9 right now. That's like extreme fear. That is like, what are people afraid of? I have no freaking clue. Okay, interest rates are going to go up because there's a lot of inflation, because the Federal Reserve's run by idiots. But that's been like that for a long time, okay? Let me explain one thing about the Federal Reserve. It's useless, okay? It's designed to enrich some people at the expense of the rest. But you don't need it in the economy, okay? All it does is exacerbate problems and create problems. And then they say, oh, now there's like, for instance, what happened with COVID, okay? In 2020, COVID appeared. And then, they created a lot of FUD around this. And they decided that it was bad for the economy, that everybody had to be sequestered and locked up at home and so on, right? So the Federal Reserve said, okay, well, we need to give away a lot of money so that, people can survive during this time, right? We didn't need it, okay? The economy was doing okay, all right? But people like to panic, right? So the Federal Reserve for 2 years been printing and printing and printing money like there was like no tomorrow. And in 2 years, they printed more money than in the previous century, okay? Which is absolutely insane. So obviously, inflation was coming. It was a no-brainer, and apparently they have no brain at the Federal Reserve. And when people said, watch out, you're printing too much money, it's going to create inflation, look at the numbers, okay, we're already seeing inflation appearing here and there, and it's like, and Jerome Powell said, it's temporary, we don't need to do anything, we're still going to print money like crazy. And Joe Biden said, okay, yeah, we need to pass these laws. We need trillions and trillions of dollars to give to the American people and blah, blah, blah. And they did more or less the same in Europe and many places around the world. They kept printing money and so on. All right. So eventually, inflation hit them in the face. And said, there's a lot of inflation suddenly. What a surprise. Yeah. So as I said, they create the problem, and then they're going to say, oh, we have to fix inflation now. Okay? Because if we don't fix inflation now, the end of the world's going to happen, right? So now they say, okay, now we need to raise interest rates to stop inflation. And we need to stop printing money to stop inflation. So they go too far on one side. They push the money printing too much. They create too much inflation too fast. And now they want to put the brakes on too fast. So they're going to raise interest rates really sharply. Okay? And that creates this extreme fear, okay, on the stock market and in the crypto market. All right? Every time people hear about higher interest rates, the stock market takes a plunge. And there's been a lot of those stocks lately, and that's when the last few days everything's been tanking. And so now, not only, see, people only look at the interest rates, but the most important factor is that they decided to completely stop quantitative easing. Quantitative easing is when the central bank buys the loans, the assets, okay, of the banks, of the retail banks, okay? So they buy them, giving cash to the banks to lend again, right? And they call that quantitative easing. And when they stop, well, it's quantitative tightening. So they decided to stop that, okay? And they no longer buy the debts, well, the assets of the banks, okay, the loans that they've issued, okay? So now the banks have no cash to lend, and that's going to trigger a recession. Every time they do that, that triggers a recession, okay? We don't need those central banks to do that, okay? The markets in general just naturally expand and contract and expand and contract. It's like the seasons or the night and the day cycles, okay? There's always cycles in everything in our lives, okay? And the economic cycles happen naturally, and the central banks interfere in them and typically just make matters worse. So there's either too much exuberance or too much of a downturn, and those things are exacerbated by the actions of central banks. Okay, central banks are not there to help you against to protect you against those market cycles. They're there to exacerbate, make them worse. Why? Because there are people that profit from this. The larger the ups and downs, the more money you can make. Okay, that's why we want fluctuations on the markets. Okay, if the markets had no fluctuation, there was no way to make money trading anything. All right, enough about that. As you can see, right now we're in extreme fear. Because everybody is like, oh my God, we're entering a recession, we're gonna die. And it's not the first time we have a recession, folks. And we don't die during recessions typically. Survive, and then the market comes back up. Okay, we just have to let it happen. Okay, so what we're gonna show today is a few tricks that I've learned. And there's a lot more, but I don't want to make this a 10-hour video on how to make money during recessions, okay? Recessions are actually one of the best times to make money. So what's a recession? The definition is a significant decline in economic activity spread across the economy that lasts more than a few months, typically visible in real GDP, real income, unemployment, industrial production, and wholesale retail sales that are all going down around the same time. Okay? So GDP is going down, income go down, employment go down, everything goes down, right? Now here's my alternate definition. Best time to hunt for good value at bargain basement prices. When most investors, even experts, are pessimistic, like they are right now, okay, this is pessimistic, people. If you don't know what it is, okay, when people are fearing, okay, to invest their money, okay, this is what this extreme fear is. People right now want to keep their assets in cash, okay, because they think that's safe. It's not, because of inflation right now that's eating up your cash. So when they feel like this, they're very pessimistic. They say, "Oh, that Bitcoin shit, and there's no way I'm gonna put my money in there." Okay, and then, but when it's Bitcoin is at the all-time high, that's when they want to put money in, and that's when we see extreme greed on that side, and everybody and their mother wants to invest in Bitcoin, whether it's the right time or not. What I'm going to try to teach you today is that try to invest in good values. Now, the problem is finding good values when people have extreme fear, and sell when people have extreme greed. Okay? That's the strategy. Buy low, sell high. Okay? And it's hard to do. I swear, it's like our instincts go against this. And it's only a few very experienced investors and traders, okay, that can manifest this theory in their practice. Okay, you have to really teach yourself to go against your instincts. People are like sheep. Okay, so the sheep jump off the bridge or the cliff. Okay, they all follow. Doesn't matter. They don't think. Okay, we talked about sheep before, right? And same thing. Okay, the price of the Bitcoin is going sky high. Oh, now it's time to buy. Yeah, it's going sky high. It's going to go even higher. It's going to go 100x from here. Yeah. Let's buy. No, you sell when it's going sky high, and you buy when everybody's dumping it. But you have to be careful. Okay, watch the charts. Okay, I'm going to show you an example. Don't catch a falling knife. Okay, I'm going to show you what a falling knife looks like. All right, so this quote comes from Benjamin Graham, one of the best investors of all times. Okay, Benjamin Graham was the mentor of Warren Buffett. All right, and he wrote a book called The Intelligent Investor, where he explains his strategies. So these are people that are called value investors. Okay, we're going to see a couple of another value investor that I like, dead now, but he was very, very, very successful before Warren Buffett. So we saw this. Now, let me go to the next page. That's what I wanted. I've shown this in the Luna UST crash, but if you didn't watch the video, then watch this. But these apply in general, okay, recession or not, and they're very, very, very important. You really have to understand these principles, okay, and that's why I wrote them here. I'm going to go through them again reasonably quickly because I went in greater detail in a previous video. But remember these are capital, okay? You really need to know this. Diversification is necessary. Look, a lot of people had all their money in Luna and UST recently, and they lost it all. Okay, Luna looked great for over a year. Okay, it looked fantastic. Even I thought it was fantastic. And then some whale said, I think I found a way to make $1 billion profit out of this and make the entire Terra ecosystem go bankrupt. So that's what whales do, okay? They're programmed to screw people and make a lot of cash, okay? And whales are inevitable. You're gonna in most businesses, okay, you're gonna have whales, sharks, and hackers that you need to deal with, especially online. See, like right now, I'm using Google Docs, right? Doesn't look like anything is going on here, right? Well, believe it or not, Google Docs is under attack right now, under our very eyes, and we can't see it. Thousands and thousands of hackers are trying to screw this system. And if you're the sysadmin at Google, you know, okay, because you probably have alarms popping up every few seconds showing, oh, we're under attack. This guy's trying to get in. This guy's trying to uh, screw us, and so on. If you have a good system with good security protocols, okay, you're able to see when you're under attack. Okay, from our end, from the end users, and everything looks normal, right? But almost every single website, even really small websites, my own websites get attacked all the time. It's ridiculous. It's like, what they expect to do except annoy me? I don't know. I mean, there's no money there, but they still try to screw it. So these things are inevitable, and especially when there's money. If you create a protocol that has millions of dollars or billions of dollars in Luna's cases, you're going to be under attack. Okay? And developers need to get smarter. Developers are not smart right now. Crypto is too young. They don't know all the tricks, okay, that hackers and whales and everything can throw at them. Okay? So that remember that. So you need to diversify because every single asset you're going to try to buy is under constant attack, even on the stock market. Okay, Tesla was under attack and is now again under attack by a lot of people trying to short Tesla. Okay, Bill Gates is shorting Tesla at the tune of $500 million. Okay. Well, he probably made some profit because the market went down. But he's really trying to push the price of Tesla down. Okay. All right. All stable coins are vulnerable. I'm going to show you right now. This is another stable coin called DE. It's from the Deus protocol. And it's tanking totally. Okay, it's down to 77 cents at the time they wrote this. And even Tether, the Tether, which is like the biggest stable coin of all. Okay, if you look at it, it's the third largest coin. There's $53 billion of this out there. And a lot of people criticize USDT because it's backed by what? And they ask, okay, it's backed by commercial paper, which is not really liquid, and blah, 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 blah. So, yeah, this one could go off peg. It went a little bit off peg here. It looks really bad here, but it was off peg a couple of cents only. Okay, it's just that it's the way the chart is designed. Here, this is much worse. This is much worse. It's 23 cents off peg. The other one is only 2 cents off peg here. But see, even this very long-standing stable coin, this one's been around since the beginning of time. It's under attack right now. Okay, at the time they took this picture, it's under attack, and it's constantly under attack. Why? Because a lot of people say, look at this, $53 billion. I want to get my hands on that. As soon as you see a lot of cash anywhere, people will say, how can I screw this up and pocket the cash? Okay? And they find more and more imaginative ways of doing it. This is constant. Regulations or no regulations. I'm not pro-regulations coming from the government. I'm pro-self-regulation coming from the crypto industry itself. Okay? The crypto industry itself should have their own standards to harden protocols and cryptos and blockchains and so on to against attacks from whales and hackers and so on. Okay, that has to come from within. The government doesn't know how it works. The regulators, you think those 90-year-old regulators that vote on in Congress in the U.S. know anything about crypto? They don't even know how to spell it. Okay. No. We need coders. We need investors. We need venture capitalists. We need the people that are within the industry to self-regulate. Okay, and help each other. Okay, this is not a competition. Okay, it's not Bitcoin against Ethereum or whatever. Help each other find solutions to this. Okay. All right. Next item. Markets are volatile and unpredictable. I hope you figured that one out. But you need to understand that volatility is necessary, otherwise, it's impossible to make a profit or a loss. You need, whether a Bitcoin goes up or down, there's a way to make money on this. But if it stays stable, there's no way to make a buck. Okay? So volatility is important. And what's nice and dangerous at the same time is that the crypto markets are very, very, very volatile. Okay? So learn how to trade and learn how to trade on small amounts, okay? Or on test amounts. You can go on various test nets and test your trading techniques before you risk actual cash. Okay? Learn how to do that. 99% drops are not impossible. We saw that with Luna. Okay? Only invest money you're willing to lose. So in the crypto market especially, it's very risky. Anything can drop 99%. I don't care what asset it is. Maybe tomorrow something crazy happens and even Bitcoin drops 99%. It's not impossible. The US government could say, okay, we put in jail everybody that's got Bitcoin. You got 24 hours to sell your Bitcoin or you go to jail. Why not? Governments can do any stupid thing they want. Okay? If they did something like that, which I don't think is going to happen, but if they did something like that, you bet that the price of Bitcoin is going to go down to zero. Okay? All crypto assets are risky. Remember this. Okay? This is not your grandmother's investments. Okay? Crypto is extremely risky. Every single crypto asset. I don't care which one. And the newest ones are the riskier ones. Bitcoin, Ethereum, and so on, those have been around a long time. They are very risky, but a little bit less risky than the newest token that got issued yesterday. Okay? So any crypto asset can go down to zero. No investment are always safe. No investments are always safe. Even the US dollar, right now, it's dropping at 8% per year because there's 8% inflation in the US. Okay? So it's not safe just to have cash in your hands or cash at the bank. Okay? And even at the bank, I would say it's, unless you have millions and millions, it's still not as safe as keeping it in your pocket because the bank could go bankrupt and you'd have no access to your cash. Or for whatever reason, the bank can decide, okay, today we're not letting people withdraw their money because of an economic crisis or war or whatever. So yeah, even cash is not safe. Real estate. We had the real estate bubble in 2008. Remember that? The stocks are crashing right now. The bonds are worthless right now. Okay? Crypto's crashing also, etc., etc., etc. It doesn't matter what you invest in. You can always lose your money. All right? So what do we do now? Chill and watch Netflix. Relax, people. Recession's not the end of the world. A market crash is not the end of the world. Make sure you have a lot of stable coins in your portfolio. Right now, I would advocate for that. Okay? Why? Because everything is just dumping and dumping and dumping, and we don't know if we're hitting the bottom of the market just yet. Okay? And that brings me to my don't catch a knife falling, which we're going to see in a minute. So, yeah, I'm pretty sure we're in a recession already. High inflation, high interest rates, volatile stock and crypto markets, the war in Ukraine, which is not going to end anytime soon because Putin is making money out of this. Believe it or not. I don't know if you watched the price of the ruble, but it's higher now than it was before the war. So Putin's winning economically. He's doing. I think the war in Ukraine is going pretty much according to plan. Maybe not 100%, but pretty much according to plan from Putin's point of view. Okay, I think it's favorable to him. All right, make sure your stablecoins are diversified. As we saw, if you had all your stablecoins as UST, they're gone. So, USDT is the most popular stablecoin by far, but as we saw, some people were trying to depeg it. Okay, so don't keep all your money in just one stablecoin. There are many, many different stablecoins, USDT, USDC, DAI, MIM, MAI, etc. So make sure you diversify, even in stablecoins, because somebody sometime may attack one particular stablecoin and push it off peg again. Okay, so you don't want that to happen. And you don't want to lose all your money, so diversify. So right now, I would put about 50% of my entire portfolio in stable coins and spread it amongst several different kinds of stable coins like these. Make sure you're using, make sure you're using protocols that have a good safety rating. I'm going to show it to you again. DeFi Safety, sorry. DeFiSafety.com. That's my main reference. I've talked about this website many times. DeFiSafety.com. Okay. The people on this website, they evaluate protocols, DeFi protocols. So if you go down here, they show the highest rated reviews here and the latest reviews. So they keep reviewing more and more projects, but at the moment there are around 200 to 150 projects that have been reviewed. So it's not a lot. It's not the entire market, obviously. The market has thousands of protocols. All right. But I use this as a reference to try to find the best and safest protocols. You can still lose money on a protocol that has 100% safety rating here. You have to understand that there are different kinds of risks. You can lose here. What we're looking at are these kinds of risks. Okay. So you have the overall score, you have the team and code, the smart contract and team risk. So here they say that it's 100% safe according to their criteria. Okay, there's nothing 100% safe, but just for according to their criteria, they think that their smart contract and the team is pretty safe. Documentation is very, very good. Testing, I see this as a weak point, an important weak point. They've not tested as much as they should have. What does that mean? That means some hacker might find a hole. Okay. So overall, it's an excellent score. 88% is really good. But again, I would not put all my money on this DeFi Saver project. I wouldn't. Why? Well, look at this. 60% on testing. The general security is 87%, admin control is 95%, Orgo is 88%. But this is an important weak point. So it's important to look at these reports and see where the weaknesses are. Okay, that's how you evaluate risk. So each of these items is a different risk element. Another risk element that is not listed here is market risk. Market fluctuations are a big risk. All right, and you can invest in this thing. you still lose money because the market crashes on you and the token tanks. All right. Make sure you're using protocols that have a good safety rating. A good safety rating, in my opinion, when you go to DeFi safety, is 80% and above. Okay, so obviously the highest the safety rating, the better. Try to go like 100%, 95%, 98%. The projects that are at the very, very top. Use DCA. We're going to look a little bit at that. Dollar cost averaging to accumulate blue chip cryptos you believe in. So, for instance, maybe your Bitcoin Maxi or an Ethereum Maxi or Solana or AVAX or whatever. So, invest in the cryptos that you think are the best ones. Okay? And use dollar cost averaging, which means you put a little bit of money every month or every paycheck or whatever frequency you want, and you buy a fixed amount in dollars or in euros or whatever currency you've got of those coins that you think are the best ones. Okay. As I said earlier, the best deals always happen during market crashes and recessions. Okay, so always be on the lookout for that. All right. So let's look at recessions. I want to show you quickly that this is not the first recession. And also that it goes through a cycle. You got like the 5 recession stages, for instance. So you have the recession, growth slows, the rate of employment falls, but prices stagnate, meaning they stay the same. And got a drought, the economy hits the lowest point, then a recovery, the growth begins again, and then expansion. So the economy grows rapidly, interest rates are low, and production goes up. However, inflationary pressures are building. And then there's a peak. That's when the growth is at its maximum rate. And then imbalances in the economy occur, and now we're falling into a recession again. And as I explained earlier, central banks have the bad habit of making all this a lot worse. So the expansion goes too fast, creates too much inflation, and then once you're off the peak, you get into a recession. They push us too fast into a recession, and so on. All right. These are examples of U.S. historical recessions. So there was one during the pandemic in 2020. There was the 2008 Great Recession that was caused by the subprime mortgage crisis, where banks were lending to people that had no money. And you had a dot-com bubble in 2001. You had the 1990-1991 recession. It started earlier, though. There was a market crash in 87. Anyway, and then you have the 1980-1992 recession, and then there was the 1973 Nixon, OPEC embargo, and the 1929 Great Depression. So the depression is that it's like a recession, but instead of lasting a couple of quarters, it lasts several years. Okay, so that was your grandparents probably remember the Great Depression, or your great grandparents. Okay, and they remember that everything was terrible. There were no jobs, no money, no food, no clothes, no nothing. Okay, so that's what they remember. All right, now let's look at this guy here, John Templeton. If you look for this guy on the internet, well, first of all, he's dead now. But you discover that he was one of the best investors of all times. Okay, and he's really a value investor, and he likes to invest when everything looks pessimistic. Okay, that's his best strategy. So I'm not going to go through this article, but we're going to go through another one that explains this strategy better than this article. This one is interesting to read too. I'm putting the links in the description, so you can read this article as well if you want to know more about value investing the Templeton way. So we're going to look at his investment principles. These are a lot easier to understand the way they're presented here. Focus on returns after inflation. I've talked about this in many videos also. For instance, remember I said keep a large portion of your portfolio in stable coins. Right now, I think around 50% at least should be a good idea. And you take your stable coins and you deposit on DeFi protocols that have a high safety rating, according to DeFiSafety.com, and that can earn you more than inflation. The rate of inflation is about 8% right now in the United States. It's a little bit lower in other countries, but if you're in the United States, aim for to obtain at least 8% so that you break even with inflation at least. Okay, so you can try on Yearn Finance, for instance. We go there. Yearn Finance. I haven't been there in a while, so I'm not sure what rates we're going to see. We have to log in. All right, so if we have to log on MetaMask to make it work. So if we go on Yearn, we go to Phantom, we check the vaults. Right now, we get a really exciting 36.14% on Frax, and Frax is another stable coin. All right. Before you go nuts, okay, and put all your money on Frax at 36.14%, these rates change every few seconds, okay? Nothing is stable in crypto, all right? The more people are going to invest in this, the lower it's going to get, all right? Keep that in mind. So, because I've made many videos about Yearn Finance, and then people say, "Hey, the rates change," and then now it's like, yes, the rates freaking change, and this is APY, okay, highest APY. So it's not going to give you 36% in one day. Don't deposit money on Frax here and expect that you're going to get 36% in one day. You get 36% in 1 year, and that's assuming that the rate stays at 36%. Very likely it's going to go down and up and down and up and down and up and up. You don't know what you're going to get at the end of the year, okay? But it's probably going to be a lot higher than what you're going to get at the bank, okay? Even if it drops to 1%, that's still higher than what you're getting at the bank. Think about that. All right, so you got Frax that's doing really well right now at the moment. Dola's giving 5.57%. That's not too bad, but it doesn't beat inflation. So at the moment, in the vaults, at Yearn Finance, Frax is the only stable coin that beats inflation. Now, if you are looking also, you also have Curve Crypto, which is 3 stable coins, and it's earning you 14.85%. So that's another good one, okay, for stable coins. Now, when it comes to unstable coins, well, just look at the rest, right? You got the Phantom token here. You can earn 25% on it, which is really good. But be aware that this one will vary. So the token can tank and go down to next to zero. Who knows, right? All right. So, and Yearn has an excellent safety rating on DeFi Safety. We can click here and we can put Yearn. And we see that Yearn and Yearn version 2 have a score of 93%, which is excellent. Okay. So, yeah. So you can trust that the protocol is, in good shape. You see, even the testing here is at 90%. Admin control is 83%. That's the only one that's a little bit low, but still above 80%, which is quite nice. Okay. All right, let's go back to our friend Templeton here. So focus on returns after inflation. Okay, you need to know how much inflation you have, and you need to beat inflation. That's number one. Number two, stop speculating. Unless you're a day trader, if it's your job, okay, all right, speculate. That's your job. But most of the time, investors make money the longer they stay in the market. Okay, so time invested, okay, works better. So don't take the market like a casino. You can definitely use the market like a casino, especially with futures and options and other derivatives. You can definitely do that. Okay, and you can make a lot of money with it, but 90% of the people just lose money speculating. Why? Because they buy high and sell low. We try to explain how to do the opposite here. Invest with an open mind. What this means is that there are times for all kinds of stuff. There's a time for blue chips, cyclical shares, bond, cash. Here, obviously, don't talk too much about crypto, but even within crypto, you have different kinds of things. There's a time for stable coins, there's a time for Bitcoin, there's a time for Ethereum, there's a time for more degen stuff, and so on. All right, buy low. It sounds obvious, but most people do the opposite. They see the price of Bitcoin going up like this, they buy at the top. And then it drops. They sell at the bottom. You're not going to make money that way. Diversify. We talked about that extensively. It says, no matter how careful you are, the future is always uncertain. There can always be completely uncertain things which you could never have foreseen. Doesn't matter how good you are at trying to protect your project, even those that have a very, very high safety rating on DeFi safety, somebody could find a way to break into the system and mess it up and you make people lose money. Okay, it's not impossible. And we're back here. Now, do your homework. Here, they're talking about stocks, obviously. So go investigate the company, their financial results, their balance sheet, etc., etc. Yes, it's harder to do in crypto, but definitely you need to check that the project is sound. Okay, does it actually make money or it just moves money around? Okay, Yarn actually makes money. Okay, make sure that the project's audited. Make sure that the project has a multi-sig in place. Make sure that the people are KYC'd or doxed. Okay, those help protect your money. Okay, so make sure you do your homework. You try to find out as much as possible about it, and try to understand what they're actually doing. Don't invest in anything you don't understand. If you don't understand it, ask questions until you understand it, and then you figure out, okay, yeah, that's a good project. I understand how they make their money now. Now, do not panic. Okay, if you do not sell your stocks soon enough when they get way above their intrinsic value, you can get stuck with them for quite a while when they drop down again. So stocks can fall quite fast at times, but panic is a bad advisor. No use in selling your shares only because their price have dropped. If their intrinsic value is still intact, you should hold on to them in your portfolio until price meets value again. Right now, the market has been tanking. The stock market especially has been tanking quite a bit. So there are companies now that are selling at a very low price earnings ratio. Prior to the recession, they were really high price earning ratios. Now they're very, very, very low. So you can look at that and see if there are bargains in there. You need to check if the company is financially sound, or their sales are doing well, and so on. And then you look at their P ratio. Their P ratio is very, very low. There's a chance that it could be a good investment. All right. There's no such thing as certainty. The only certainty you have is that it's uncertain. Okay? You don't know what is going to happen tomorrow. See, investment in IPOs are rarely a good idea. IPOs and ICOs, obviously. Most of these stocks or tokens are unable to beat the market. The only reason they are brought into the market is because investors are willing to pay a premium price for them. All right? So that gives you an idea of this guy's John Templeton's investment ideas. In general, he buys low, like right now. Okay, right now this guy would be, if he were alive today, would be super excited. This is the best kind of market for him. Okay, he loves to look around and say, okay, is Apple are Apple shares at their bottom right now? Do I think there's only one way but up at this point? Is Apple doing well? Their sales are doing well. Then there's no way that the market is not going to recognize that at some point. Okay, that's what he's doing, right? And he would be doing right now. All right. Let's have a quick look at dollar cost averaging, because that's a method that I think you can use in recessions and even in expansion times, okay, to take advantage of the lows, to buy more tokens or shares. And once the price goes up, well, now you have a lot more money. A lot more value has been accumulating. So what is dollar cost averaging? It's an investment strategy whereby an investor makes multiple purchases of one asset over a period of time, realizing several different entry prices. A DCA strategy can reduce the volatility of an initial investment because the investor makes purchases over regular intervals as opposed to all at once. Dollar cost averaging can be achieved via the setup of an automated investment program or through an investor's own judgment when making follow-up investment. So sometimes you can have an app from your stockbroker or your crypto broker, and it allows you to buy, let's say, $50 worth of Bitcoin every single month. Okay, so that's one way of doing, and a lot of people have been making a lot of money doing that. Very famous person on Twitter. I want to show you Tetra nodes. All right, Tetra node. All right, this is one of the most famous and richest investors in DeFi. Okay, check his page. There's a lot of information on it. A lot of it is tongue-in-cheek, but still. Anyway, that guy for years and years and years, that's what he's been doing for, I think, for 6 years in a row. All he was doing was taking a part of his paycheck and buying Bitcoin with it. Didn't matter if the price went up, the price went down. Every paycheck, he would buy some Bitcoin, the same amount, and so on. So you can do the same thing. You can invest, I don't know, it depends on your budget. You can invest $20 a month on Bitcoin. You can invest $50 a month on Bitcoin, 100, 1,000, whatever you can afford, okay? And if you like Bitcoin, obviously. And you take advantage of the ups and the downs, because when the price goes down, you're $50 buy more Bitcoin than at the top, right? So it brings down your cost of acquisition a lot lower, okay, than if you only buy at the top. All right, and that helps you make more profit, and also it gets you in the idea of saving money for the future on a regular basis. So how to profit from a recession? Have money in stable coins, a good part of your portfolio in stable coins, okay, to avoid having your entire portfolio crash. All right. Those stable coins, don't just keep them in your wallet doing nothing. Deposit them in safe DeFi protocols. You check them up on DeFi safety first. One example is Yearn. Right now on Frax, you can make quite a bit of money. Okay, these rates will go down. Okay, don't worry about that. Nothing is fixed. Okay. So that's one example. Don't put all your stable coins on investment on Frax, obviously. Diversify. Because maybe Frax gonna go off peg one day. I don't know how it would, but maybe it will. Okay? Maybe somebody will find a way to crash it. All right? So diversify your portfolio of stable coins. The other coins, try to focus more on blue chips. Okay, the most popular and most liked tokens like Bitcoin, Ethereum, maybe Solana, AVAX, Phantom, whatever. Okay, you choose. Okay, and those tokens, what you want to do is use DCA, right? Dollar cost averaging. Every month you buy a little bit of, let's say you have 3 or 4 blue chips you want in your portfolio, and you put, let's say, $100 a month, and put $25 each. Okay? All right. If you do it like that, you take advantage of the lows, and when the prices go up, you profit more. Okay? That's one way of surviving a recession. You buy low, and when the market is too exuberant and everything, everybody's frothing in the mouth and is greedy like hell. Basically, when you see that this arrow is completely on the other side, then it's time to sell your blue chips. Okay, and wait until things crash again. to buy them back, but at a lower price. So now you make profit instead. All right, so that's it for this video. If you like this kind of stuff, please like and subscribe. Don't forget to ring the bell. Download the free book. All you have to do is put your name, your email address, and hit the submit button, and you get a big fat button that says download the free book. If you miss that button, we're going to send you an email with another button that says download the free book. And if you don't want a free book, then you go to Amazon, you pay $5.99 to Jeff Bezos, and Jeff will send me $1. See ya.